Hello, this is Vince from Sniper Day Trading, and what you're looking at is a hourly chart of Apple Computer. This is dating back to October, early part of October, and these are the signals that would be generated by my trading method. There's no indicators up on the screen, and the signals here are generated strictly by the trading method itself. And if I were to put up some of the indicators on top of the screen and under the screen that I generally use and look at as a guideline, those indicators would match up nearly perfectly to these trading signals. So it's not that the indicators are confirming the method. Well, actually they are. The indicators are confirming the method, but it's not that the indicators are generated. The trade signals are not generated by the indicators. So as I said in my blog, which came first, the chicken or the egg? And it's the trading method came first, and that's where the signals are generated. And that's a good trading method. That's exactly how you will look at price structure and price action. Anyway, these are the signals, and you can see long, short. There's some pretty big gaps in there, but those are the signals that would and will match up perfectly to the indicators if in fact I do put them up on the screen. Slight discretion, like in this trade here, I say out. We are in an uptrend, so could take that as a short signal and possibly get stopped out or close the trade out in here, but um, trend is up in this case. This trade here looks very strong, short, and so on. So there's a few little small, very small discretionary considerations to take in mind. Let me just go through the rest of this. But all those signals are pretty clear cut. We have no room really for gray area, other than just like I said, the outs. Um, the outs could be. I don't like that as a long. I like that as an out. But if in fact that was taken long, out, and long, I'd be probably getting out right underneath here as well. So the last part of this tends to get pretty choppy in anticipation of Apple's new product that is coming out or that came out today. And so that's why you probably see a lot of trading action in here. This is a good long right in this area, and yeah, this is straight up, straight down, straight up. It's pretty hard to trade in that, but a lot of good signals in here, short. So, in any case, that's that. This is a chart of RIM, Research in Motion. This is a daily chart dating back a year and 9 months. This is a continuation pattern long. I could see getting stopped out on this trade, going short, um, re-entering short right in over here, long, short, long. This could be just an out. It's one of the discretionary things, like I'm saying, that can be an out, but then this could be that bar. You could re-enter more or less about the same price here. Anyway, just want to keep going here. Next could be out as well or short. So that's the discretion if you want to take that short on a gap. The next trade long looks good. Next trade short looks good for a small counter trend. It's this right in here. This would be long. I would see that, taking that as an out. Re-entering long here. Big gap, kind of risky taking that short, but you can always use the gap. It closes the gap a little bit above. In this case, entering short here. Stop could be at the high end of the gap, and if that was the case, then yeah, you'd still be in the trade. But and that brings us almost to the end there. That's the end right here. So long, short. This is currently still short. So we'll see. Could be changing direction here, but in the next few bars or so. But nonetheless, that's what I have. Trading method works in any time frame, minutes, hours, days, ticks. Doesn't really matter what you trade, but the basic tenets of the method are still consistent with any trading instrument. This was just an example of that. So thanks for tuning in. Hope you enjoyed that. And I know my blog was a little long today, but it was a good post with some good questions. Right. Thanks a lot.